Welcome to this video. In this video, I'm going to be doing a stock analysis of GE Aerospace. So if you like this video, please don't forget to leave a like and subscribe. And of course, remember this isn't financial advice. This is purely for entertainment and educational purposes. Now, what is GE Aerospace? Well, they're an aerospace company. Of course, it is in the name. And as you can see here, it's also in other transportation. And they do quite a lot of stuff, as I'm going to show you right now. As you can see how they make their money. Let me first remove all of these, which they don't earn any money from. These as well. As you can see, they do quite a lot of stuff. This doesn't mean they don't make any money from them. Well, it does, but just doesn't make enough to be shown here. And I don't like this. As you can see, look at how many things they have here. That is absolutely insane, which means this company isn't very streamlined and they have a ton of useless things. At least that's my opinion. And I'm not a huge fan of the stock. Another thing I don't like, as you can see here, we have these three huge earners in power and in renewable energy and in aerospace. And as you can see, we don't see that last year. So they almost fell out. We did see, as you can see here, commercial engine services, and I do believe that was the aerospace, which got a new name. But as you can see, that fell $5 billion. So I do believe that this one just changed names. There was something about that. But on overall, just look, renewable energy not doing very well, as you can see here, and power as well, as you can see, just not doing that great. So you can also see that here in the annual earnings. Just look at this. They used to make quite nice money, and now it really isn't performing these years. So I don't like the stock anymore. Now, however, even though with that being said, I looked at how crazy it has performed ever since October in 23. It has just risen quite insanely, and I just think that's because it is in the aerospace branch, and I just think every aerospace company these days are going quite insane. As I think it is going to be maybe the next trend is going to be aerospace companies, but I don't think this is going to be the winner at all. I think this is quite overrated at the moment. I think I would say hold if you own it, because I do think it's going to increase more. Because I think a lot of people think, oh wait, we got to get into the stock now. Also because a lot of the new ETFs regarding aerospace companies own this, so it's going to increase the money in this as well. So if you own it, I would hold. If you don't own it, I wouldn't buy it, because I think chances are of you losing money is greater if you don't own it already. Now, as you can see also down here in the beta, it is quite more volatile. It is 52% more volatile than the average index, which it is in, and the beta means, so if the index it lays in moves 1%, this moves 1.52%, so even more. Now, and also let's take a look at the RSI. That has been quite great, but of course that makes sense because it is moving upwards. So of course we see great RSI. Now, if you don't know what the RSI is, that is the relative strength index, which means the strength of the stock or which way it's moving. As you can see, once it's up here between 70 and 50, it's moving upwards. As you can see up here, we're lying quite high. As you can see all the way up here in 88, just increasing more, sharp rises. But now when it's down here, as you can see right here, it falls off a cliff, as you can see, and that is below 50 and 30. So down here it's moving downwards, and if it's below 30, it's oversold. So it's oversold and overbought. So if it's up here, it's a lot more expensive. If it's down here, it's chances are it's more cheap. But always be careful, because this doesn't mean it's not going to move more up. As you can see, this one, it was trading at what, 230, and it currently trading at 250. So of course, even though it was overbought at the moment, it increased in price. And as you can see, even though it did fall here and increased afterwards, chances are it could just fall to 100. We don't know. Of course, we do know now, but at the time you know it, you see it, of course, you have to be quite wary of it. Now the earnings, they are performing a bit better. As you can see, these past quarters, as you can see, they're earning a bit more than expected, which is of course nice to see. Now they do pay out dividends, but it's really not that much. 0.58% is impressive, and it annoys me that they pay dividends. And you might think, well, why would that annoy you? Well, because they're not performing that greatly financially. So I would rather see them that they don't pay out dividends at all and focus on reinvesting in the company. Now, the one thing I hope by this company, because it is a great company, is if they would strip some of these. Now imagine if how much more streamlined and easy it would become to manage this company if they just got all of this out. As you can see, they have power and water, appliances and lighting. It just really doesn't make any sense, in my opinion, that they have so many legs to stand on. They should simply focus on what they're good at, which is aerospace. Now the seasonals in this stock are quite great. As you can see, let's just go back to 2010. As you can see, some years are quite great. These two past years up 92%, 66%, and this year as well up 50%, which is absolutely insane. Of course, if you bought it in pre-2023, I mean, congrats to you, because you made a ton of money. But as you can see, if we didn't have these 3 years up here, the best years from 2010, of course, it's up 44%, but we also see huge losses sometimes, which of course also quite bad to see. But overall, it's a bit of a coin flip. So we see some great years, of course, these past years, but we also see some huge losses. So be careful with this stock. Now, technicals for this stock are of course great. As you can see, for the day it's a buy, and for the month it's a strong buy, which shouldn't surprise you. Again, we also have this golden cross here forming on late April. As you can see, it has just been a steady rise up, well, not even steady, a quite sharp rise up ever since the bottom out here of 165, 64, so almost $100 up from that point, which was what, 2 months ago exactly. So be a bit wary as it has increased a bit more in a bit of too short time, in my opinion at least. As you can see, the 1-year price target average is down by 2%. It doesn't surprise me at all. And look at this, we have 15 strong buy, but the average is below. This is, in my opinion, means that, of course, a lot of analysts needs to reiterate what the rating on it should be, because as you can see, the rating is, of course, still strong buy, but the average price point is below, which means the stock is probably overpriced now if so many of the strong buyers think it should move down. Then we also have 2 buy and 5 hold. So as you can see, the maximum rating is up 18.9%, which of course great as we all halfway through the year. But overall, as you can just see, look at this. From June 23, it has increased so much. So of course, be very, very careful with this stock. I don't like it at all. As you can see annually here, they are expecting to make more and more money. Hopefully that is true after we have seen 2 or 3 quite poor years in a row. Let me just look at this. As you can see, yes, all the way back from, what is that, 2020, we have lost money, more and more money. Of course, 2 poor years here in 21 and 22. We did make better money here, as you can see, in 23 and 24, but hopefully we are gonna increase that. Now, as you can see down here, annual, let's just hope that it is true that it is going to increase it, but just look at how much money they made earlier. So, of course, maybe this is because they are planning on streamlining the company and selling a lot of parts off. I don't know this. I haven't been able to find any information on that whatsoever, but hopefully that's what they're going to do, and that is the reason why that they are expecting to make so much less money than they did previously. Well, that was my stock analysis on GE Aerospace. So if you like this video, please don't forget to leave a like and subscribe. And of course, if you want me to make analyses on any other companies, please leave those companies in the comment section below, and I will check those out.